As of 11:45 a.m. Eastern Time, November 7, 2025, shares of Rezolve AI plc, ticker RZLV, are trading at $3.62. This reflects a sharp intraday drop of about 5.97%, putting the stock down $0.23 on the session. Today's trading has been volatile, confined to a tight range between a low of $3.57 and a high of $3.75, with over 4 million shares already changing hands, indicating significant activity and investor focus. Now, many looking at that drop might assume it's just another day of volatility for a small-cap tech name, but the story here is far more complex. What most charts won't show you is the massive unresolved tension sitting just below the surface, a conflict that peaked in late September and is defining the battleground for this stock right now. While the daily price movement seems erratic, it's the echo of a massive spike in fails to deliver that recently saw over 7.9 million shares fail to settle in a single day, a truly staggering number for a stock of this size. This isn't just random noise, it's the footprint of a major fight between institutional bulls and a very public short seller campaign. The common belief surrounding Rezolve AI is one of deep skepticism, and frankly, it's an easy narrative to buy into. This is a company that went public via a SPAC, a path that has left many investors with significant losses and a healthy distrust of forward-looking projections. The market is littered with companies that promise the world and fail to deliver. This skepticism was given a powerful voice on September 29th when Fuzzy Panda Research released a scathing report. The allegations were severe, that Rezolve was overstating its revenue, that its claims of a proprietary LLM were a fabrication, and that the company was little more than a ChatGPT wrapper faking its annual recurring revenue, or ARR, by acquiring other failing startups. This report sent the stock tumbling and validated the fears of every skeptic. But here is where expectation and reality diverge sharply. While the short report painted a picture of a hollow shell, the company's subsequent actions and filings have presented a completely different reality. The expectation is that a company this heavily accused would be quiet, perhaps issue a weak denial and fade. The reality is that Rezolve AI came out swinging. It issued a point-by-point rebuttal, calling the short report self-serving and misleading, and directed investors to its audited financials and SEC filings. But more importantly, just 2 days later, on October 1st, the company released its first half 2025 financial results. These weren't the numbers of a failing wrapper. Rezolve reported first half revenue of $6.3 million, a staggering 426% year-over-year, beating consensus estimates. It reported a gross margin of 95.8%, and, most critically, raised its 2025 guidance for ARR to a $150 million exit rate and initiated 2026 guidance at $500 million ARR exit rate. This is the core of the conflict, a short seller thesis alleging $0 in AI revenue, and an audited financial report claiming 426% growth and a pipeline guiding to $500 million. This conflict is visible in the stock's recent behavior. The trading volume we're seeing today isn't new. The stock has been highly active for weeks. This is a battleground. On one side, you have the short thesis. On the other, you have a slew of recent announcements that seem to directly contradict it. On November 5th, just 2 days ago, Rezolve announced an accelerated commercial expansion into the US and Europe, funded by a recently completed, oversubscribed $200 million financing round. It also announced the appointment of a former Microsoft executive to lead this new U.S. sales charge. This isn't the behavior of a company with no product. Furthermore, the company has been highlighting its strategic partner status with both Microsoft and Google, moving beyond simple marketplace listings to joint go-to-market commitments. And just this week, on November 4th, Rezolve seized on comments from Amazon CEO about agentic commerce being the future of e-commerce, positioning itself as a first mover that has been building the infrastructure for this exact concept since 2016. This brings us to the short interest, which is the flashpoint for this entire story. According to the most recent data from Fintel, the short interest on Rezolve stands at approximately 11.55 million shares. This represents about 7.73% of the free float. While that percentage isn't astronomical on its own, the cost to borrow those shares is. The borrow fee rate is currently sitting at an elevated 9.63%. This means it is expensive to maintain a short position, putting pressure on those betting against the stock. This rate has been much higher, with traders in forums like Reddit discussing borrow rates that had spiked to triple digits earlier this year. But the most alarming piece of data, and the one that every current investor needs to be aware of, is the fails to deliver, or FTDs. FTDs occur when one party in a trade fails to deliver the shares by the settlement date. While they can happen for administrative reasons, massive spikes can suggest issues with locating shares, often associated with heavy shorting activity. In the last week of September, coinciding perfectly with the Fuzzy Panda report, Rezolve's FTDs exploded. On September 22nd, FTDs hit 7.97 million shares. They stayed above 7 million shares every day for the next week, peaking at a value of over $55 million on September 24th. This is not normal. It is a massive signal of stress in the market for RZLV shares. What's your take on that FTD spike? Do you see it as a sign of aggressive, perhaps naked shorting, or just a temporary plumbing issue in the market? For investors, this data is actionable. You can monitor short interest data yourself through platforms like Fintel or S3 Partners. The key metrics to watch are the short interest as a percentage of the float, the days to cover, and the borrow fee rate. Right now, the days to cover for RZLV is very low, at about 1.34 days. This means that based on average volume, it would only take shorts about a day and a half to cover their positions, which typically reduces the chance of a sustained squeeze. However, when you see a borrow rate near 10% and a history of FTDs in the millions, it suggests a different kind of pressure. Investors should also monitor the option chain. Currently, the put-call ratio for Rezolve is very low, at around 0.15, which indicates that far more call options, bullish bets, are being traded than put options, bearish bets. This can be a sign of retail and speculative interest, but it can also be used by larger players to hedge other positions. The risk here is clear. Chasing a short squeeze is dangerous. The data suggests this is less of a classic squeeze setup and more of a fundamental war over the company's very legitimacy. So who is on the other side of this trade? While Fuzzy Panda is short, 13 F filings from the last 2 quarters show who is long, and the list is impressive. As of the latest filings, over 100 institutions hold RZLV, a 40% increase in the number of owners. More importantly, we see massive new positions and additions from some of the biggest names in finance. BlackRock, the world's largest asset manager, established a new position of 4.75 million shares. The Vanguard Group initiated a new position. Jeed Capital Management and State Street also took significant new stakes. This means that while short sellers were building their thesis, institutional giants were quietly accumulating millions of shares, betting on the long-term reality. So what does Rezolve AI actually do? The company positions itself as a leader in AI-powered e-commerce. Its core product is the Brain Suite, an AI platform for retailers. This suite includes Brain Commerce for product discovery, Brain Checkout for transactions, and its proprietary LLM, Brain Power. Their entire pitch is that it enables agentic commerce, the idea of autonomous AI agents that can search, transact, and personalize experiences for shoppers. They claim their Brain Power model is superior for this task because it was purpose-built for commerce and achieves effectively zero hallucinations, a critical requirement for enterprises that cannot have an AI making up products or policies. Their client list includes over 100 enterprises, naming major brands like H&M, Urban Outfitters, and Ferrero. This is the business model that institutions are buying into and that analysts are modeling. Looking forward, the picture for Rezolve is one of extreme binary outcomes. The bull case, supported by 8 analysts who rate the stock a strong buy with an average price target around $9, is that Rezolve is successfully executing. They see the $150 million ARR guidance for 2025 and the $500 million guidance for 2026 as achievable. They view the partnerships with Microsoft and Google as validation, and the new $200 million in financing as the fuel needed to scale. In this scenario, the short report was a buy-the-dip opportunity, a temporary dislocation caused by a self-interested party. The bears, however, see a different future. They are betting that the short report is correct. They believe the revenue growth is an accounting fiction, that the enterprise clients are not meaningfully deployed, and that the $500 million ARR target is a fantasy. They are betting that the company will burn through its $200 million and that the institutional buying was a mistake. The catalysts to watch are clear. The company is set to participate in several investor conferences this month, including events hosted by RBC Capital Markets and Roth. Any update on its ARR, customer deployments, or the U.S. sales rollout will be scrutinized. The next earnings report will be paramount. The company must prove its $150 million ARR target is on track. Failure to do so will give massive credibility to the short thesis. Conversely, if it meets or beats that projection, it could be devastating for the remaining short positions. Investors should also monitor the institutional filings in the coming weeks to see if BlackRock and Vanguard added to their positions during the September sell-off. Comment below with what you think is the more likely outcome. Does Rezolve hit its $150 million ARR target, or was the short report all along? Ultimately, Rezolve AI is a story of total contradiction. It is a battle between an explosive analyst-backed growth narrative and a damning short seller accusation. The expectation set by the short sellers is that this is a zero,